non-farm payrolls came out, and the market basically took it as that the economy is cooling. When the jobs data came out, it was the print was 187, which is under the market expectations. So that's a weak signal. Unemployment rate dropping is a strong signal, but it's only dropped by a fraction or 0.1%. So it's still, I guess, on the cusp, and people will now be looking towards the inflation numbers for another measure on where the US economy is at. But we're still, the Fed is not meeting until the end of September, or towards the end of September, so there's plenty of opportunity to get it right or wrong as to what the Fed's going to do with these inflation numbers. But Friday's numbers, jobs numbers, the market took that as, hey, interest rates have peaked and there's no more to come. And you can see here, this is the 10-year bonds, came off rapidly, and we look at the 2-year bonds, also came off, not as much, but also a significant move considering the week before. So the market's sort of starting to price that in. Apple disappointed, and so Nasdaq got sold off, and as did the stock market, got sold off. You'd think the stock market would do well in these conditions, that, hey, interest rates have peaked, therefore the next move will be down, which is good for stocks. But I think the earnings seasons, in particular Apple, weighed on the stocks on Friday, because Apple reported on Thursday night and they missed. So VIX starting to climb a little bit. People maybe locking in some concern. We go and have a look at the commodities. Oil is up, gold up a little bit, but still pretty well down from its highs. As I've mentioned before, we are coming into that seasonal time of the year when gold does perform better. You've got copper going sideways, iron ore weakening. So commodity currencies got touched up on Friday, in particular the CAD, but Aussie as well. So we're going to have a look at the US dollar index, and because interest rates were coming off, US dollar was obviously sold with that. So dollar had a big down day, just back to this level that we've already recognised, which was like circa 102, 101.80. It might come back and backfill that, but if that trend continues, we've got, if you're looking at this trend, really you've got lower highs and lower lows, right? So the market's back into a downtrend on the US dollar, and if we breach this low here, you'd say, well, yeah, that should continue for the next couple of sessions, and that puts us on the pound here. Lovely little ring swing low here, and if it makes a new high, then you'd expect that to go and test this high here. So that'll be one to watch, is the pound. Euro also had a reasonable strong day, so closed it towards the high of that range, big strong range, but it is making higher highs and higher lows. So another high across there, and you'd expect that to go that way. Probabilities are in the favour. Whereas Aussie dollar, no strength off it really. Yes, it closed, had a higher high and a higher low. But when you look at the Aussie dollar, it's really just still in that range of 65 to 68 effectively. It's been there since March. So I don't see that really changing. The Labor government is doing, the more I see the Labor government, the less I like it. Albanese is, anyway, I'll try not to get into politics, but Labor governments are no good for an economy. as our democratic governments are no good for our economy, and certainly Bidenomics, as they're calling it, is having a detrimental effect to the US economy. I think that's about it for today. I'd like to see the US dollar weaken a bit more to breach that new low, and see the euro and the pound swinging back into that uptrend. Looking ahead, we got Chinese inflation on Wednesday, and we've got obviously the US inflation Thursday night. Otherwise, it's a pretty quiet week ahead. So it'll all be driven by price action rather than fundamentals. So we'll be back tomorrow to see if there's anything worth talking about. Thanks, guys.